Did you know series on general awareness, Part 2. This video is attempting to provide some useful information on the following topics. 1. Wages of farm laborers in India in 2022-23. 2. Central Public Sector Enterprises, CPSEs, in India and their classification. 3. Difference between foreign direct investment, FDI, and foreign institutional investment, FII. 4. Passport Index 2023. 5. Grand Slam winners of 2023. 6. Movie industry's top grossers of 2023. Did you know? The average daily wage of an agricultural laborer in India in the previous FY 2022-23 was 345 rupees. Agricultural laborers in the state of Madhya Pradesh were the lowest paid in India with an average daily wage of 229 rupees, lower than the national average. Gujarat with 241 rupees, Odisha with 285 rupees and Maharashtra with 303 rupees were the other states with the lowest average daily wages for rural farm workers. Kerala has the highest daily wages for farm workers with an average daily wage of 764 rupees, which is more than twice the national average. Kerala has been paying the highest wages for agricultural labourers consistently since 2015. The other highly paying states are Himachal Pradesh, 473 rupees, and Tamil Nadu, 470 rupees. Maharashtra saw the highest increase in agricultural wages between the pre- and post-pandemic period. This data was compiled by the Reserve Bank of India and released in November 2023. The data considers only male agricultural labourers, and the data regarding wages of women farm labourers in 2023 has not been released. Did you know? A central public sector undertaking, CPSU, or a Central Public Sector Enterprise, CPSE, is a company which is either fully owned by Government of India, or a company in which the direct ownership of Government of India or other CPSEs is not less than 51%. The Department of Public Enterprises under the Ministry of Finance is the nodal department for all CPSEs in India. As on 31 March 2021, there were 389 CPSEs, excluding banks and insurance companies. Of these, 108 enterprises were yet to commence commercial operations and 26 CPSEs are under closure, liquidation. The remaining 255 were operating enterprises, including 165 scheduled CPSEs. There are 12 public sector banks, PSBs, and 7 public insurance companies in India as on 15 December 2023. CPSEs in India are categorized as Maharatnas, Navaratnas, Miniratna 1, Miniratna 2, depending on their capital size, net worth, turnover, and profits. The classification is done to provide them with better operational autonomy to compete efficiently in the domestic and global business environment. As of December 2023, there are 13 Maharatnas, 16 Navaratnas, 62 Miniratna 1 and 11 Miniratna 2 CPSEs in India. CPSEs fulfilling the following criteria are eligible to be considered for grant of Maharatna status. It should be a Navaratna company. It should be listed in the Indian Stock Exchange, with a minimum prescribed public shareholding under SEBI regulations. It should have an average annual turnover of more than 20,000 crore rupees during the last 3 years. It should have an average annual net worth of more than 10,000 crore rupees during the last 3 years. It should have an average annual net profit of more than 2,500 crore rupees during the last 3 years. It should have significant global presence or international operations. The breakup of the 13 Maharatna companies in India are as follows. 6 companies from the petroleum and natural gas sector. Oil and Natural Gas Corporation Limited, ONGC. Indian Oil Corporation Limited, IOCL. Bharat Petroleum Corporation Limited, BPCL. Hindustan Petroleum Corporation Limited, HPCL. Gas Authority of India Limited, GAIL. Oil India Limited, OIL. Two companies from the coal and thermal power sector. Coal India Limited, CIL. National Thermal Power Corporation Limited, NTPC. 5 companies from the infrastructure sector. Bharat Heavy Electricals Limited, BHEL. Power Grid Corporation of India Limited, PGCIL. Steel Authority of India Limited, SAIL. Power Finance Corporation, PFC. Rural Electrification Corporation, REC. This breakup will give you an idea that energy and infrastructure are two very important industrial sectors in India. Oil India Limited was the latest CPSE to receive the Maharatna status in 2023. For a CPSU to be classified as Navaratna, it must first be a Miniratna and have 4 independent directors on its board. And a score of 60, out of 100, based on 6 parameters which include net profit, net worth, total manpower cost, the total cost of production, cost of services, PBDIT, profit before depreciation, interest, and taxes, capital employed, etc. For a CPSU to be classified as Miniratna 1, it must have made profits continuously for the last 3 years or earned a net profit of 30 crore rupees or more in one of the 3 years. For a CPSU to be classified as Miniratna 2, it must have made profits continuously for the last 3 years and should have a positive net worth. Did you know? State Bank of India, India's largest bank, was also the country's top profit-making CPSU in the FY 2022-23. With a profit of 55,648 crore rupees, it was not only the highest profit-making PSU but the highest tax-paying PSU, as it paid taxes worth 18,840 crore rupees to the government. Life Insurance Corporation, 35,997 crore rupees. Oil and Natural Gas Corporation, 35,440 crore rupees. Coal India Limited, 28,165 crore rupees. National Thermal Power Corporation, 16,912 crore rupees. Were the other top profit-making CPSUs in India in the financial year 2022-23. Bharat Sanchar Nigam Limited, BSNL, and Mahanagar Telephone Nigam Limited, MTNL, are the top loss-making CPSEs in India. Disinvestment is the process of reducing the government ownership in a CPSE, CPSU by selling the shares to private investors. This is done to bring in more operational efficiency to the company and also to raise money for the government, which can be utilized for development projects. If the government's ownership in a CPSE, CPSU goes below 51% due to disinvestment, it is called privatization, as the government ceases to become the major shareholder and private investors get the authority to run the company according to their vision and strategy. After the introduction of the new economic policy in 1991, Government of India set up a Disinvestment Commission in 1996 to identify the CPSEs that can either be privatized or in which the government ownership can be reduced. This commission was subsequently upgraded to the Department of Disinvestment. In 2004, the Department of Disinvestment was renamed as Department of Investment and Public Asset Management, DIPAM, and brought under Ministry of Finance. The disinvestment target given to DIPAM for the FY 2022-23 was 50,000 crore rupees. But it could achieve only 31,059 crore rupees through disinvestment in the last year, out of which 20,500 crore rupees was raised by selling 3.5% of government shares in LIC of India. The disinvestment target given to DIPAM for the current FY 2023-24 is 51,000 crore rupees, and the achievement till November 2023 was only 8,859 crore rupees. Did you know? Foreign direct investment, FDI, is the investment in the form of ownership made by a foreign investor, company or government in a company or a project of the another country. The investment comes directly into the company, which can be utilized for expansion of operations. Foreign institutional investment, FII, is the investment made by a foreign investor, company or government into the financial markets of another country by purchasing stocks, bonds, debentures or other financial instruments. The investment goes to the sellers of these instruments and hence may not result in any direct monetary benefits of the company of the country to which the investment is made. FDI is a long-term foreign capital directly received by a domestic company which results in enhanced production, sales and profit, thereby increasing the GDP of the country. FDI need not always be in the form of money. It could also be in the form of resources, technology, strategies, know-how, etc. FDI investors have control over the management of the company in which they are investing. FII is either long-term or short-term foreign funds received by the financial markets, stock and bond markets, that increase the capital value of the market but does not result in any increase in the GDP of the country. FII is only in the form of money. FII investors are only interested in making quick money from the market. For these reasons, receipt of FDI is more beneficial for the long-term economic growth of a country than that of FII. When a country has a stable and healthy economy, like that of India, it will attract FDI as there will be a lot of growth potential that the foreign companies want to exploit. When the financial markets of a country are strong and dynamic, it will attract FII as foreign companies are interested in making money from such markets. Total FDI inflows into India in the FY 22-23 is $70.97 billion and total FDI equity inflows, funds received as capital, stand at $46.03 billion. Mauritius, 24%, Singapore, 23%, USA, 9%, Netherlands, 7%, and Japan, 6%, emerge as the top 5 countries for FDI equity inflows into India FY 2022-23. Top 5 sectors receiving highest FDI equity inflow during FY 2022-23 are: services sector, finance, banking, insurance, non-fin, business, outsourcing, R&D, courier, tech. Testing and analysis, other, 16%. Computer software and hardware, 15%. Trading, 6%. Telecommunications, 6%. Automobile industry, 5%. The top 5 states receiving the highest FDI equity inflow during FY 2022-23 are: Maharashtra, 29%, Karnataka, 24%, Gujarat, 17%, Delhi, 13%, and Tamil Nadu, 5%. India received its highest ever FDI inflow of $83.57 billion in the fiscal year 2021-2022. Did you know? The power of a country's passport is measured by the number of countries the passport holder can visit without a prior visa. The Henley's Passport Index is the ranking of all the world's passports according to the number of destinations their holders can access without a prior visa. The index includes 199 different passports and 227 different travel destinations. The index is compiled by Henley & Partners in partnership with the International Air Travel Association, IATA. Henley & Partners is an investment migration consultancy based in London, UK. The Passport Index is updated on a quarterly basis every year. As per Henley's Passport Index 2023 updated in December 2023, Singapore has the most powerful passport in the world as its citizens can visit 193 destinations without a prior visa. Japan, the top-ranking country in 2022, is in second place with visa-free access to 192 countries. Germany, Italy, Spain, France, Sweden, Finland, and South Korea occupy the third place with visa-free access to 191 countries. India's rank in the Passport Index 2023 is 83 with visa-free access to 58 countries. India's rank was 80 during the previous quarter of 2023 and it was 87 in the index of 2022. Afghanistan has the world's weakest passport followed by Iraq and Syria. An Afghan passport holder can visit 27 countries without a prior visa. Henley & Partners has introduced another index known as Openness Index for the first time in 2023. It ranks countries based on how open they are to foreign citizens. In other words, the ranking depends on how many countries are provided with visa-free access to a particular country. 11 countries in the world share the top rank in World Openness Index 2023 as they provide visa-free access to citizens of 198 countries and territories. Of these 11 countries, 7 are in Africa like Burundi, Comoro Island, Djibouti, Mozambique, Rwanda etc. 2 countries are in Oceania. The Australian continent and the islands scattered throughout the Pacific Ocean are collectively called Oceania, Micronesia and Tuvalu. 2 countries in Asia, Timor-Leste and Cambodia, also provide visa-free entry for citizens of 198 countries and territories in the world. India has an openness rank of 93 with visa-free access provided to 3 countries which are Nepal, Bhutan and Maldives. Afghanistan, North Korea and Turkmenistan share the last rank in the World Openness Index 2023, 97, as these countries do not provide visa-free entry to any country in the world. Did you know? Grand Slam is the collective term used for a set of major matches or sports tournaments held in a calendar year, in some sports like tennis, golf, or rugby. A tennis Grand Slam refers to 4 important professional tennis tournaments held in a year, which attract the highest ranking points, prize money, public interest and media attention. They are 1. Australian Open, 2. French Open, 3. Wimbledon, 4. US Open. The Grand Slam season of every year begins with the Australian Open held in Melbourne, Australia for 2 weeks from the middle of January. Started in 1905, it is the youngest Grand Slam tournament. It is a tournament played on hard surface and is called a hard-court tournament. French Open is the second Grand Slam tournament of every year, held in Roland Garros, Paris in late May. It is a clay court tournament. Wimbledon is the third Grand Slam of the year, played on grass at Wimbledon, London, England in late June and early July. Started in 1877, Wimbledon is the oldest of the Grand Slam tournaments. US Open is the final Grand Slam tournament of the year held in late August and early September in Flushing Meadows, New York, USA. It is played on a hard surface like the Australian Open. Any professional tennis player who wins all 4 tournaments in one discipline in a single year is called a Grand Slam winner. Winning all 4 major championships consecutively but not within the same calendar year is referred to as a non-calendar year Grand Slam, while winning the 4 majors at any point during the course of a career is known as a career Grand Slam. If a player wins all 4 Grand Slam tournaments and the Olympic gold medal in the same discipline, in a single year, such a player is called a Golden Slam winner. Steffi Graf of Germany is the only tennis player in history to have won a Golden Slam. She won all 4 Grand Slam titles in 1988 and followed it up with a gold medal in the Seoul Olympics of 1988. As of December 2023, Novak Djokovic of Serbia holds the record of 24 major Grand Slam singles titles, including a record 10 Australian Open titles. He is the only man in history to be the reigning champion of all 4 majors at once across 3 different surfaces, 2016, and the only player to complete a triple career Grand Slam, 2023. He is followed by Rafael Nadal of Spain with 22 Grand Slam titles. Among women, Margaret Court of Australia has the highest number of singles Grand Slam titles. 24. The winners of the men's singles and women's singles titles in the 4 Grand Slam tournaments of 2023 are: Australian Open 2023. Men, Novak Djokovic, Serbia. Women, Aryna Sabalenka, Belarus. French Open 2023. Men, Novak Djokovic, Serbia. Women, Iga Swiatek, Poland. Wimbledon 2023. Men, Carlos Alcaraz, Spain. Women, Marketa Vondrausova, Czech Republic. US Open 2023. Men, Novak Djokovic, Serbia. Women, Coco Gauff, USA. Did you know? As of December 2023, the movie that earned the highest box office collection ever in Indian cinema is the Hindi movie Dangal. Released in 2016, Dangal has collected a total of 2,024 crore rupees till date. It is followed by Bahubali 2 with a total collection of 1,811 crore rupees. This movie was released in 2017. The third highest grossing movie in India is RRR, released in 2022, which has earned a total collection of 1,387 crore rupees. Incidentally, RRR also secured an Oscar award in 2022 in the category for Best Original Song shared by Keeravani, music, and Chandrabose, lyrics. The Indian movies with the highest earnings in the year 2023 are Jawan, Hindi, 1,148 crore rupees. Pathan, Hindi, 1,050 crore rupees. Animal, Hindi, 835 crore rupees. The movies with the highest ever collections worldwide are Avatar, English, 2009, $2.9 billion. Avengers, Endgame, English, 2019, $2.8 billion. Avatar, The Way of Water, English, 2022, $2.3 billion. As of December 2023, the movies with the highest collection in the year 2023 globally are 1. Barbie, English, $1.4 billion. 2. The Super Mario Bros. Movie, English, $1.3 billion. 3. Oppenheimer, English, $954 million. Thanks for tuning in, hope you found the video insightful. If you did, don't forget to give it a thumbs up, share it with your friends, and hit that subscribe button for more engaging content. For additional resources and in-depth discussions, check out the Telegram channel and WhatsApp group links in the description below. Your support keeps us going, and we can't wait to bring you more informative videos. Until next time, take care.